you've been watching my channel for a while, you know I've posted a lot of videos about massive returns I've made on Lofty. I've also talked a little bit about, you know, the average investor losing. Today I wanted to share one of my losses on here that I think is more in line with what the typical experience is for an investor on Lofty.AI. What's up, YouTube? It's Joe Catchpollia, sitting on the couch, making some money investing in fractional real estate online as usual. Well, today I'm actually talking about a loss, but usually I am making some money. So, what is this? We got this email today. It's the redemption email for 2423 South 51st Court. I think that's Court. Where we received $33.78 per token for our redemptions. You know, they're saying, okay, your average trading price on the marketplace over the last 6 months was $50.69, meaning, right, I mean, that's $18 in spread, roughly, meaning that the average investor that bought over the last 6 months lost 36% before fees, right? They lost 36% on the capital between, you know, purchase and sale. Now they're saying, oh, well, also, you know, if you think about all the rent that was paid out, it was $41.58. Well, if I bought it 6 months ago, I didn't get the last 4 years of rent or 3 years of rent or whatever. So this number is kind of meaningless. Yes, total rent was paid out. That was paid out over a long period of time. And, you know, it's not, I think it's kind of weird to just throw that into, you know, this scenario. But I'm going to do it even when I do my math, just to give them as fair a picture as possible and how this investment actually turned out. But it is, you know, essentially we made a very large capital loss on this deal. One of the things that was problematic, I think, is that, you know, they gave us, okay, this was the closing proceeds. This is what showed up on the settlement statement. But then there were two large sums that were subtracted from it. This repair funds owed to Tyler, the co-owner. And when you click into this, it brings you to a drop box that just basically shows a paid invoice. I went back and tried to find where this property go. Let's do this. Open that in a new link. Looked back through our past votes and on the property page, and I couldn't find anywhere where we authorized the spending of $12,000 in repairs. I could certainly be missing it, and so if anybody is aware of it, let me know. I did respond to this email and say, hey, why are we subtracting this? I don't see that we authorized it. You know, obviously that work, I don't question that it was done or that it needed to be done in order to sell the property. But we shouldn't be spending funds that we're not voting on. And so I'm a little bit curious about that. The other thing too is if you read this, all the parentheses are supposed to be subtracted and the ones that aren't in parentheses should be added. That's like a normal accounting convention. And if you look at it, yes, it makes sense. The security deposit is money that we got, you know, added back into the equation. But they screwed up on this one because these were funds owed to Waylick. And when you do the math, you start here, you subtract those out. And this one, that's how you get to the net number. So this is just displayed wrong, right? This should be in parentheses as well, being a negative number. Anyway, the reason I mentioned that is because I've been digging into both of these numbers, trying to figure out, are those amounts that the Dow really should have paid out of the closing proceeds? You know, if you look back when Waylick took over, there was a vote at that time for some repairs and some, you know, a capital call, but I didn't see this specific amount. When you look onto look into his spreadsheet that he's provided, you know, I figure out where this number comes from. Between his contract and that vote, I think that we can kind of figure out that, yeah, this number is at least in the ballpark of what we were supposed to pay him, but I really couldn't figure out how we got to this additional $12,000. There is a lot of discussion in the Discord where he's basically saying, hey, we had more work. He had an invoice or, you know, an estimate to do repairs that was $10,000. That was basically these same repairs, or is what he said. You know, it's the repairs that, you know, Alex contractor didn't do was the claim, but I didn't see anywhere where then we went and voted to get that done. I don't know if he just took the fact that we had voted to do it earlier as, okay, we can do it again, right? But I mean, we clearly spent $12,000 more than I expected just going through the publicly of, the stuff that's listed on the page, the stuff that's in, that we clearly authorize. So that's a little bit frustrating, right? That, I mean, if you look at this, right, $12,000, let's just take that number, 12,359.95 divided per share or per token. That's $4.45 per token difference that, could be the difference between a profit and a loss for some people. And I think when I dig into the math of this, for me, it'd be very close, right? Let's see. So, and what did I do? How did I get to this math? What am I doing here? So, I redeemed actually only 79 of the 80 tokens that I currently held. That's because I have one trapped in the liquidity pool. If you can see, I have 0.999883 of a token. In my experience, when this has happened, after they wind down the pool, I get at pretty close to the full redemption amount for that token. So I'm not too concerned about it. So I did my math based on redeeming 80 tokens. I went to Lofty Assist. I went to the wallet scan. I pulled up transactions. I exported those transactions. That's where this sheet comes from that I keep pulling up. And I deleted everything that wasn't this, 2423 South 51st Court. You can see I have actually purchased 90 tokens over time, and I previously sold 10 of them. And just to make, to be as fair as possible to Lofty, I'm including that in my calculation. Before I forget, please like and subscribe. In the description of this video, I have links to all the places where I'm currently investing in fractional real estate online, Lofty being one of them. Please do your own due diligence on those links, any promises they make regarding free money or bonus shares. You want to check exactly what the terms are for that. Also, just do your own due diligence on the platforms and the properties themselves. Just because I'm investing in these doesn't mean it's the right decision for you. So please do your own due diligence. Also, in the description of this video, there's a link to the Discord channel I set up. You're welcome to join that. There's a whole bunch of us that talk about all different fractional real estate investing platforms. There's no cost. It's not a sales funnel. And if you get DM'd from someone who looks like me after you join, that's an imposter. Please report them. I'm never trying to sell you anything in the DMs. Okay, so back to this. Let's see. So what does my math look like? I bought 90 tokens total. And so what I did is I, added up all of the purchases. And on Lofty Assist, it's actually giving you your total token purchase price, right? So 4112, this is including all the costs associated with the token, not just the token price at that point in time. I made 2 sales, and those sales were quite a while back. You can see back in 2024. But so those come out of my basis, right? So $444. That gets subtracted out of, or added back, right? Because I spent this much. That's why it's red. It's negative. Made some sales. You can see I sold those for a little bit more than my average token price. I would have done better if I just sold everything then. But at the time, I purchased most of the tokens after that, and they were cheaper. My redemption, I'm calculating as if I redeemed all of them. So I'm ignoring that single token that's trapped at the moment. I also added back my total rents. Where did I get that number? Let's see. I went into my account dashboard, looked here. Oh, nope. Back it out. Went to my account dashboard, and then you do the show. Why is this? I feel like it's changed again. Clicked on the show details and just took my total rent earned here. Yeah, now it just shows that I have the 1 share and it's staked. Okay. And so added back the rent, and then I also got staking rewards too, because I had these staked for quite a while, and I'm only counting my based staking rewards because I got a little bit of quote staking rewards, but that was additional capital that I invested, right? And then I took off. And so I'm ignoring that because it would actually make my basis more, and I think it actually makes this look worse. But you don't have to do either, right? You don't have to stake on either side, but because it's an additional way to make some money, I went ahead and did it here. So $18. So my net loss on this whole, this entire, cycle of buying tokens, selling some tokens, redeeming, collecting rent, staking, I lost $405 on a total investment of $3,701.25. That's almost an 11% loss. Why did this happen, right? Like I've been telling you, I've been doing really well on Lofty. Well, if you notice, I started buying this one way back when I started on Lofty. I still was under the misguided impression that it was a platform where you could do well buying properties for the long run. And actually, if you watch a lot of my previous videos, when I've purchased shares in this property, I was like, oh, this is one of my most stable performers. It's one of the few that I've bought for the long run. I think that we should be able to do fine. And so what happened? Well, basically the Lofty ecosystem happened to this property. We had a tenant move out. It was taking a while to re-rent it. And there were I think there were going to be some expenses too to get it re-rented. So then there was we were using a third-party property manager, and the co-owner was working with them. It obviously, I think that we could have continued the status quo there, had to put some money in and raise a reserve, but continued to rent it, fix the problems, and then moved on. But instead, because Lofty is a democracy and it's full of investors who panic when we don't have a yield, we decided to switch managers. This was taken over by Walick. At the time, I also voted for him to take it over, because he had been doing well on the properties that he had, and it seemed like he had some momentum and success. And so I fell for this as well, right? I thought, oh, he'll be able to do a better job. Evernest hadn't been fantastic. Well, it turns out, okay, this stayed vacant for even longer. He started to do some work. We weren't really getting much done out of him, and we've heard about this quite a bit, right? He took on too much too fast. Did a poor job managing a lot of them. Spent most of his time focused on a relatively few deals that he had just invested a bunch in, like Brownfield being one of them. Some of the ones where he was battling with Cal on a regular basis. And so some of these ones that I think probably would have been a little bit easier to just handle kind of just fell by the wayside. It's unfortunate. I think we did a vote to let the co-owner take back over or to handle the sale. I'm not sure exactly. But then by that time, the property had been vacant for a while. We'd accumulated some expenses from repairs from the prior PM, from Alec getting some stuff done, and then from the current the co-owner when he took back over the process. And one of the things that happens when you have this discontinuity of management is a lot of finger pointing can go on, right? And you can end up getting double charged quite a bit. And it really feels like that's what's happening here. It feels like some of the stuff maybe should have gotten done here, got paid, but didn't actually get done. But nobody was really checking on it. It was done again. Maybe that's not what's happened. This is the problem with this platform in general, is it's really hard for us to know. And because there's not somebody at the end of the day who's taking responsibility for the outcome, it is really up to all of us individual owners. And none of us, for the most part, have enough money tied up in any one of these deals for it to matter. To really want to roll our sleeves up and dig into it, at least, in large part. It just sort of, this sort of sat there. Like I said, I had some money tied up in this, but I really didn't push it. I wasn't focused on it. And I think it's after a recent video, one of the people who's really active on Lofty was like, yeah, this is, it's not a passive investment platform and you're going to have bad results. And I agree that that's the case, right? Like if you're not constantly pushing to make sure the right thing is happening to your properties, this is why the average investor is losing money on Lofty and losing significantly more than this, right? I mean, 11% loss on here on one property is really not that bad. And if you think about it, I made more money on that Winkler sale that I only had $650 invested in. I made more money on that deal than I lost on this one that I had significantly more invested on. Now, obviously, this is going to bring my average down quite a bit because I had a decent chunk of money on here. So this is a disappointing outcome, but it's not a huge surprise. I was expecting to lose money on this one when it sold. I was expecting to lose less than I did. I didn't realize that we had this $12K bill coming up that we had to pay out. I also didn't realize that we owed so much to Waylick. These sorts of things I think should just be much more clear from the listing page, right? And I realize now Lofty's going to say, well, we don't control the listing pages anymore, right? The PMs do. Well, yeah, that's true, but they could control it, but two, they could have very detailed requirements of what needs to be included on the listing page at all time. Like, we shouldn't be voting for a sale and not know that there's $18,000 of bills that have to come due. And if you look at the property page, it wasn't, as far as I could tell, it wasn't clear to me from anywhere on here that there was, what do we have? Operating reserve, negative 1,100. Well, I think that's this bill that we paid to Lofty. So we knew about this, right? But we didn't know about this 18,800 and whatever, like, from looking at this page. And so we're voting with minimal, without all the right details. And honestly, money was spent without authorization. Should we even be in a position where we're paying that back? Probably yes, right? Because in some of the cases, it's money that had to be spent. But at the same time, without the right transparency and so like if it was done in an emergency situation, that's one thing. But when it's just done with some discussion on Discord, or okay, well, we had a prior vote and we paid, we knew we were going to spend some, but now we're spending way more. I think that's completely unacceptable and something that when we do go to redeem, that just shouldn't get paid out, right? It should just not get paid out to the co-owner or to the management, Waylick's Management LLC. If it's not justified. And I'm not saying that 100% of that isn't justified, but it's certainly, unless there's a vote that I'm missing somewhere, it certainly wasn't all authorized, and that's problematic, right? And it's something that us as the individual owners aren't in a position to police, right? All we can do is say we can do the actual voting, but making sure, holding the PMs accountable to the vote, there's nothing that we can do beyond that. And so that really should be Lofty's role in this situation. As far as, I don't know who else's role it would be, right? Like, I mean, unless you're just saying, oh no, it is just the PM, and so what you can do is vote for a different PM or sue them. I mean, that's sort of a silly, a really silly way to run a business. And anyway, it is part of the reason why, a good portion of this redemption that is now cash in my account is just going to come out of my account, right? Just like I did with the last one, I'm going to keep a little money on, reinvest in some of the deals that I think are really undervalued. But I'm certainly not going to happily just leave all the capital on here. The other day I added a little bit more on because there were some really good deals. And so, okay, where does this leave me, right? Like, I had an exciting exit the other day, have a really disappointing one today, and maybe some of this will get straightened out. I doubt it, though. I don't think we're getting another penny beyond that back. I think that and I already redeemed my tokens because I didn't think there's any chance that that's going to change. Maybe that was a dumb decision. I don't know. But I really, it doesn't change my strategy on here, right? I was investing in this particular property under that sort of failed mindset that I could invest in long-term rentals on this platform for a stable income, or long-term investments on this platform for a stable income. So why don't I believe that, right? Like, okay, well, this is an example of a failure, but that doesn't mean they're all going to, right? Well, because of the nature of this particular fractional real estate platform, we are always at risk of having other investors be unhappy with a lull in cash flow and then pushing for a sale or pushing for a change of management, or like we shouldn't be, by having the ability to shift strategies so often. And just to be perfectly frank, having the general, the average investor on this platform isn't really well versed in real estate, right? But their vote counts as just as much as anybody else's. And so often, if you own real estate investments in real life, there are going to be months, and sometimes even several months, that you don't have any cash flow. And if we panic when that happens and change directions, or just sell whenever that happens, or whatever the case may be, have the token price tank, we're always susceptible to somebody coming in and deciding it's time to sell this. Just like I've been doing on a lot of the deals that I've made a lot of money on, right? The token price will crash, and so that gives me an opportunity to come in and buy cheap tokens. And then the rational thing to do in my situation is to then push for a sale, because that's the way that you get a significant return on your capital. Because for whatever reason, once tokens come down, some of them have come back up, but almost none have come all the way back up to 50, and very few have ever gone above it that have gone significantly below. I've mentioned lots of properties that I have, or a few that I have that I think, oh, this is more of a long-term hold, right? Like the Madison properties, I've really thought about them in that way, that they're ones, I think Earl's going to manage them well. I think, I'm going to hold them for the long term, but at any point, some of them are extremely cheap token-wise right now. Why this just is not, I think I'm just not seeing this. I don't know if there's a UI issue at the moment or what. Usually I can see like the token prices and whatnot. But anyway, at any point in time, if those tokens tank low enough, and people with sufficient ownership structure have bought them, sufficient ownership percent, we can have a vote to sell them, even if it's a loss for a lot of us, because it's a big gain for whoever bought them most cheaply, right? And so unless you have, and that's one of the reasons why I still think the Madisons are kind of safe from this, is because there's so many committed owners in that group that whenever the token prices go too low, there's usually people buying them up, but not always, right? Sometimes, some of them are at like 28 or 30 bucks. I don't know what they are right now, and maybe not getting snapped up. But overall, like, I really thought this one was a good, it had a very stable long-term rental history. I think we could have gotten it to a point where it was in that same position again, maybe with a slightly lower rent, but it had really low, loan to value. The debt was, it had a co-owner that was reasonably involved. I really think what we could have gotten there, and it was the overall investor panic and wanting to just be, maybe too proactive, or use Waylick, who was at the time doing really well with a couple of properties, and was, and had a lot of momentum on the platform, was doing well, dealing with a lot of the issues that Cal was creating, all that sort of stuff. It just, it derailed the business plan for that property, and I just really believe that that can happen to any property on this platform. And I'm sure that I have done that to other people, right? Like some of the ones that I started buying up really cheap and then pushed for a sale and then made some money on that sale. There were definitely people that bought that at 50 that were not happy that that's what we did. Now, at the same time, I think that once those token prices start going down, it's often the case that the only way, the most profitable path forward for all of us is to sell it. Like, I voted for this sale expecting to lose money on this sale, right? But I wasn't going to just hold on to this one, just hoping that we do slightly better, right? I just want to, okay, give me my capital back. Let me take my loss. Let me then put it into something with a much deeper discount where I'm going to go and make some more money, right? Because I mean, this small loss is not a big deal relative to the opportunities that exist in the marketplace, right? And so, and some of it I will reinvest on this platform. Some of it's going to go into some other platforms or just back into my, my general. Well, I guess I have been trying to keep a certain portion of my fractional real estate capital separate, right? So I guess I'll probably put it on ARC7 or maybe on some new platforms, right? We still have a couple of new platforms that should be coming out in the next couple of months. There's always new stuff that are showing up. So I don't know, but even though I'm not actually just recycling it on the platform, it is the way that I like to think about my investment capital, right? Like it is. I just want the money. I'm never going to let a loss just sit there. I'd always, unless I think that property has the potential to come back and do just as well as whatever the next thing that I'm going to put that money into is going to do. And I think that's just a lot of times a poor assumption, right? People just hold on to their losses because once they realize that loss, once they actually get the sale, that's when it stings, right? A lot of them just think, oh, let me just keep holding this. And I think it's, I know like mathematically it's the wrong answer, right? Like it might feel good to not take that loss, but if it's not the best place for that money to be sitting, let's just sell it. Let's take the capital. Let's put it into something, where we are getting a significant discount and we do have a chance to make a great return, coming up soon. So, I guess the biggest takeaway, this didn't change my mind about the way Lofty should be used. It actually just sort of reinforced it, right? It made me think even more. I'm not buying anything that's not a huge discount to what I think we can sell it for, which most of the tokens I bought on this one were not a huge discount. I was buying this one early on thinking that I was going to, just continue to collect rent and that it was going to be a decent long-term rental. And just because we're subject to the whims of the masses on this platform, I don't see it as being a very safe way to try to manage long-term investments. And so for me, the democracy of, the democratic outcome or the, structure is actually a bug, not a feature on Lofty, right? I would rather have more guardrails, more restrictions, more, somebody being in charge. And I think that we can achieve that, right, by having a specific manager run it, having a smaller ownership group control the properties. But, that's something that us as individuals can do on certain properties. But unless we're willing to do that, just using the platform as a whole, as a place for long-term investment doesn't make sense. Like I said, I think there are scenarios where you can make it work. But I don't want to be, I think the average investor coming to this platform it's providing a real disservice to them that it has to be used in that manner when you go to, I wonder if this still gives you wow, this is so slow. Do we still get the NASDAQ of real estate little line on here? I can't believe how long this is taking to load. No, you don't see that anymore on this front page, huh? What happens there? Yeah, there we go. When you go to the NASDAQ of real estate, you don't think, oh, I need to buy and control that company, right? I've never bought stock in a company on the NASDAQ thinking I'm going to take control and make sure that just my friends are controlling this with me. Like, it's just not the scenario that they're setting up in people's minds, right? Where, I'm not being a passive investor in these properties, or if I am, I'm just riding the coattails of a few smart, a small group of people who are running it. And I think there are some of those opportunities still on Lofty, but they are still the minority opportunities, and where I think you can't, where I know you can make money still is buying the deep discounts, selling those properties in real life. But over time, those opportunities are just going to dry up, and then I'm just not sure. Maybe it just becomes a platform where people kind of use it for their own syndications, basically, or where you just do have these little ownership groups that run their own fiefdoms within it. I mean, I don't know. It's just a platform. I mean, you guys can tell I've struggled with where I think it fits in for a long time. I think the real problem is their messaging to new investors versus who's actually, and who they market to and the way they do things, who they attract versus who's actually successful on the platform are just very different, right? Like, I think that the way Lofty works, like, and actually would work for people, is much more similar to what Fractional.app is trying to do. Like, that model where you've got a small group that's using the platform to basically pool their capital to do deals together, is much more. I think that's where you could actually see some success on the people who are using Lofty like that, I think, are the ones that are actually seeing some success. I mean, there are people like me who are either just trading or who are buying and then trying to push for sales in real life. But for anybody who's trying to hold something long term or do deals that, they're not just flipping tokens, into equity, I think the ones that they're doing it are doing sort of what I described, but it has nothing to do with, or it's not the business model that I think the average person would expect when they just come across Lofty's marketing and website and, use the language they use, the interface, all of that, right? I mean, so much about it makes it appear like it's sort of this passive investment, even though they say you have to be an active investor, but then they say, well, to be an active investor, you just have to vote when you get emails. Well, okay, which is it, right? I mean, that's not really being an active investor, and if that's all that you have to do to qualify, well, then great. But if all you're doing is voting when you get those votes, again, I think you'll lose money overall in the long run. So, and that's played out over and over again, people losing money on these deals. I think I've said the same things like 4 different ways now, so I'm pretty much going to be done with this. I'm keeping some money on, going to buy some more of those deals, but overall, big disappointment on this one, because it is one I think we could have just held, continued to rent, and if this had been in my own personal portfolio, we would have had a little blip, and that would have been it, right? And so that's it. Anyway, until next time, I'm going to just keep making mistakes so that you don't have to.